The Nvidia tip from week 18 is really paying off as Nvidia been skyrocketing. But this week Nvidia will have quarter results. Is this the end of the Nvidia rally? Well, that's one of the questions I will try to answer in this week's podcast. You are listening to Trading Tips with Jim, and for the next half hour I will guide you through what I think will happen in the market during the week, and of course by the end look at the Trading Tips portfolio which we've been following for so long. Last week I told you I would try to get into Pintrest because I told you I think Pintrest really has an opportunity. It was oversold, way oversold, and maybe as you remember I told you that now I think is the time to pick the oversold candidates, and it was a good trade. I was able to get Pintrest quite cheap on the Monday, just enjoying a very good week, having Pintrest up more than 5.8% so far in the portfolio. But it's a new week, and there is new things that will affect the market. So the question is, how will the market be? Usually I don't tend to be political in the podcast because politics divide people, and we've seen that especially over the last few years, not only in US but in most countries. The politics are hardening, and so is the rhetorics. But politics have consequences, and we are facing them right now, and I think we will face some really huge challenges coming up. So I'll spend a few minutes on that topic before we move over to the more easy parts. Like I said in week 19, then I said I think everything was laying the ground for a strong week, and I said I thought in week 19 that Nasdaq could do 3 to 5% jump, as we had very strong support below, very little resistance above. And if we just got some direction in the debt ceiling talks, that could push off the market. As you remember, it didn't happen in week 19, but it did happen last week. Again, we have a week with the same situation. Everything will depend on the debt talks. But we have to remember that last week we took out some of the potential in a positive result of the debt talk. Now here comes the twist. Everyone knows that US will not default. The chance for US will default is extremely little. Now you read the newspapers and you see the politics and the rhetoric say that okay, if there is a default, the world will crash. The world economy, especially the Western, not so much the Eastern, is anyway heading for a crash. If you don't believe me, then watch strong economists which are independent talk about the economy, and all of them say the same thing. We are heading for a major crash. Now maybe you're a new listener and you think, oh fuck, that's really judgment call. As I always say, the stock market will turn long before the economic market. Most of the things that you see in the stock prices today is already discounting a recession. The estimates for the quarter earnings, they was already lowered long before the quarter results came in. Some quarter results, S&P 500 came in above so far, coming in above expectations, but you have to remember these was already lowered. And for the rest of the stocks, they have been coming around 6% less than expectations, which again was lowered. And here come a small teaching. It's about pricing of the stock. You sometimes will read in the newspaper that the market is fairly priced, or it's undervalued or overvalued. The stock prices is way too high for the value. These values often refer to fundamental numbers, and to make it easy, they often refer to the price earning. What happens now? As income is reduced, as profits is reduced, the price earning goes down. So the market can still, despite falling quite much since last year, and for sure since Nasdaq was 16,000, falling quite much, it can still be overpriced compared to the price earnings. So price earnings is just how much money the stocks, the companies make in actual return per share. So these numbers are still high, and some say they are way too high. So yes, we had a huge fall, but there is room for much more. In trying to keep that red line to things, I said that again we are heading to a situation where there will be a lot of things, especially decisions by politicians, affecting the stock market. We have the debt talks. They will come start today, so you can expect some news all the way. Very, very good debt talks should push the market up, because there is still lots of support below, very little resistance about the 13,000. At the same time, if the negotiations turn into a few conditions in the debt talks, reductions of different spendings, that could also lower the market. So nobody really knows exactly how much the resolution of the debt talks will affect the market, but some of the upside was taken last week. So I don't think, even if a good debt talk decision come in, resolution to the debt talks, the ceiling is being raised, I don't think that it should boost the market very, very much. So then the question is, so what other things can boost the market as is? Now Nasdaq is up, if I'm not mistaken, almost 20% since New Year, so it's already taken out a lot of the potential. The actual earnings for the companies are coming in way lower, meaning that the price earnings per share, the share price divided on the actual earnings of the company, is still very high. There is tons and tons of indicators saying that right now the stock market is overvalued, and many are waiting for a huge fall. So what are the things that can trigger this fall? If you remember way back, before Ukraine war started, I told you there will be a Ukraine war, this will affect the stock markets and so on. And during this last year, I now and then said that this is the week that you should pay attention to things in Ukraine, because it will affect the stock market. Then we went into a very, very long period where things were calm, and I said that you should focus on different other numbers, you should focus on the quarter results, the job numbers, etc., etc. But this week we again are getting back to Ukraine. Now, if you are a new listener and you haven't followed this podcast, which has been ongoing for almost 4 years, you heard me list up the things that would happen, how inflation would come, how the Ukraine war would come, and all these things. And I said that I think that from within first half of 2023, the Taiwan conflict will come for sure. We are already more or less done with the first half of 2023, and the Taiwan conflict is luckily still not escalated to military level. It's still brewing, everything is brewing, despite being very calm in the newspapers. Everything is building up. The Chinese are building up their forces, they are putting more and more forces around Taiwan, everything is building up for what will be a military escalation. It's just a question of when. And the reason why it will not slow down is because of the Ukraine conflict. Now, this is big politics, and you have to understand a few things. So, first off, is the West has decided it will support Ukraine no matter what happens. And pushing more and more weapons into Ukraine leave Russia with less and less opportunities. Now, you hear so much in the Western news world how the war is going. They win Bakhmut and they don't win Bakhmut, and it's back and forth. You cannot trust anything. The one thing, and this is very hard because you have your own biases, you have your own beliefs, and of course everyone supports Ukraine. What you have to understand is that Russia will never voluntarily go for a defeat in Ukraine. It will not happen. Something extraordinary will happen if Russia is just to lay down weapon and walk shamefully back to Russia. It will not happen if we do understand this one premises. We do understand that there has to be some sort of peace talk. Now, in Europe, nobody talks about peace. If you go to an EU meeting or whatever, everyone is just talking how much can we escalate this war to make sure that it will continue, because everyone wants to become a Churchill. Stoltenberg dreamed of becoming the new Churchill, but the thing is that Russia will not back down. Russia has a few allies, and these allies we've been speaking about in the podcast. I was telling you how the BRICS would grow up to be very strong, how the dollar is being threatened, and all these things. We'll not dive back into that now. These are for a much more longer run, but how world is divided. We are getting close to the point where Russia has very few alternatives, because last week United States said that we would send F-16 to Ukraine. This is a new huge escalation from the Western side. And the question is, how will Russia respond? Russia will respond somehow, and that is why I say, for now you have to again keep focus on Ukraine, because out of the blue, could be this week, could be next week, hopefully it will not happen. There can be some very devastating news, and they will crush the stock market, and not only the stock market. My sadly bet was that this conflict in Ukraine will end with Putin using small tactical nuclear weapon as he's being pushed. He will end up with the only last resort. That is a small tactical deterrent. And we can only guess how that will go. What will happen then? The latest saying is that when Putin, because more people than me expect Putin to use a small nuclear deterrent, is that United States, along with NATO, will use conventional weapons in the Black Sea and Crimea and bomb heavily. So how will Putin respond to that? Just look at his ships being sunk, his war fleet being sunk, etc. We will see. But everything is again pointing to a strong escalation in Ukraine. And China is not stupid, never been stupid, never will be stupid. They do understand that at some point they will have to side in the conflict. So far they try to stay neutral, but they have had growth plans for a long time. If you're like me, you like to watch any sort of news, you like to watch absolutely everything, trying to consume a lot of information, understanding that some of it is just pure bullshit, some of it is pure propaganda, etc., etc. You also follow the Chinese quite much. And I've been watching Xi Jinping's talks to the Union several times, and they have made no hiding of their plans, how they would take the world. First, doing it by growing the economy using the Western methods of demand and supply, the common economic markets that we have here in the Western world. So China tried to avoid that for a long time using their communistic approach. Didn't work, so they went for the market approach, working extremely successful for China. They've been growing GDP at an insane pace ever since changing their market ideology. And that has enabled them not only to grow economically, but also military, building out an extreme strong military force. And they plan to expand, they say this openly, they plan to expand further. Taiwan being maybe the first step, so that's the reason for the Taiwan conflict. On top of this, and now things starts to get a little messy and maybe too much politics for you. On top of this, the dollar, because it was used as a sanction in wars, and especially in the Ukraine war, been used as a tool, sanction tool. Everyone is moving away from dollar, meaning that the hegemony of the dollar is reducing at an extreme fast pace. If you don't believe me, just check it out yourself. It's an actual truth. And if dollar loses the position, US is put in an even worse position. If you look at all of these things, you look at an economy that is sliding down. holding on much stronger than I thought. I actually thought that we would be in a much more, we will be in the defined recession by now, heading into the stagflation by now. It's a little delayed, but we are really heading in that direction. That inflation will not go away anytime soon. It will remain strong. And the interest rate hikes, they will start to account into economy and lots of other things. So we are heading for worse time. Only a few miracles can put us out of this bad course. One of these things is peace talks in Ukraine. That is why I'm cheering for peace talks, because that's the only way we can get out of the economic mess that we are slightly growing into, and the instability in the world as is growing way too fast. In all of this, you're listening to a trading tip podcast. We want to generate money. I put parts of my holdings into gold, etc., to be sure, and we have, despite these bad markets, been able to make money. But we have to understand these big lines, because that should define how we will position things ahead. So what I'm saying, we have to round up all the things that I just said, put it into some sort of sense, if it makes any sense, and then look at a few things heading to the podcast. So we are heading for a week of two things. There will be the debt talks, of course, and I think that, again, Ukraine and war conflicts will again come up to agenda. On top of this, all of this, because we are talking a little further ahead, America losing the dollar position means that they will have to wage more wars. It's just how it is, like it or not like it. And sorry if I offend my American listeners, but it's just how it is. Anytime an economy goes down, the solution is to start waging wars. And of course, the war industry is cheering on, bribing everyone they can, pushing the sales of their goods as hard as they can. And that is why, for instance, in the trading portfolio, we went into a war-related stock. And anyone watching GM knows that GM is making insane money on war as is, and they will continue to make war money forward. But knowing all these things, there is nothing as we speak saying that the tension in the world will get less. And on top of this, we're getting closer to an election, and given the current circumstances, given the previous circumstances, and I'm talking about the US election, we are heading in for uncertainty. I guarantee you that we're heading in for huge uncertainty. So that is how we will play things moving forward, in how we position ourselves. Now, this week, because we will just aim specifically for this week, what will happen this week. So we had a good week last week. Nasdaq moving up 3.04% last week, ending the week at 12,658 points, while Dow Jones was up 0.38%. So both these indexes was up last week, and especially Nasdaq had a good week, pulled by some of the major companies, of course. This week, there will be the debt talks today, especially today, and they will continue all week. So you will have drips, and I expect markets to move up and down according to rumors, according to news, etc., just based on this. Tomorrow, you will have some numbers which you should pay attention to. It will be the manufacturing numbers, the PMI numbers. They will give you an idea of how the production is going. I don't think market will pay too much attention. I don't think they will move market much, but you should be able to get some insights in general. Wednesday will continue with more economic numbers. There will be mortgage application numbers. These numbers will also give you an idea about the economy, how the state of the economy is. On Thursday, we will have job numbers. Job numbers keep coming in much stronger than everyone believe, and frankly, I don't understand how it can continue doing so good. Some explanation is that all the governmental spending, because they have spent billions upon billions growing the governmental sector, is accounting for all the layoffs in big tech and other companies. Because if you read any quarter results, and there will be many quarter results coming this week as well, all of them are laying off people more or less. Everyone reports that they will cut, they have cut, or they will cut unemployment. So where are all the people going to? That's the question. But at some point it should get also into the job numbers. I keep following them as a guidance to what is happening in front. Friday will be personal income numbers. Again, a number that will tell you something about the state of things. And as I told you, there will be quarter results numbers coming in now. It's not so many interesting companies. I think it will be Zoom today, if you like that company. And then it will just be later this week. Where you will have Wednesday, you will have Nvidia. Nvidia being on a strong upturn. Recommended it to buy in week 18 when it was just under 280. Got into it myself. Sadly cut by stop loss, giving profit, of course. So personally I went up, but it just kept going up and up. But will it end with the quarter results? That will be the thing. So Wednesday you want to watch what happens with Nvidia. For sure, I think. On Thursday, you will have Best Buy, Dollar Tree, Costco, and Marvel. 4 companies that should move before, under, and after quarter results. So if you are the speculative type trading, these are some of the companies, some of the known companies, and I think all of these will move quite much before, after, during when the results is actually released, the first few minutes, and the following days after the quarter results. Now, the week, as I said, should be a lot up and down. And to be honest, I cannot say for sure what my decision will be, a green or a red week, because it can be a very strong green week, and it can be a very, very red week. Depends how things stack up, how the news stacks up, how things. And I noticed that sometimes when I might be a week off, like I was in week 19. I said that I think there is brewing for a mini rally on Nasdaq up 3 to 5%. That didn't happen in week 19. It happened in, of course, last week. So I have a feeling I might be on the same roll, but I see a strong drop coming. Not sure if it will be this week, but I see it coming. One number that we usually follow trying to determine this is the 10-year Treasury yield, and the 10-year Treasury yield went up 6.23% last week to 369. Every time the 10-year Treasury will go up, the markets go down. So going 10-year Treasury go up, and money is moving out of the stock market. You should be aware of this. So much money is now on the sideline, just waiting for directions. They are going into bonds, etc., where they get a better pay for with less risk. So tons of money are still leaving the stock market. Oil went up $1 last week to $71, and as I still am very bullish to oil. I think it's a more safe place to be. We have to understand that if the economy go down, the consumption of oil will go down, but I think this will be compensated by all the warmongering indeed, and all this dividing politics, pushing a BRICS country grouping harder. We see the South, we see the Saudi Arabians, and everyone is grouping, and they can use oil as a tool. Despite now we put Venezuela back into the heat, and Chevron, which we have in the portfolio, is one of the companies now allowed to use cheap Venezuela oil. So we open up Venezuela, trying to account for some of these kind of losses, but still I think oil can be used as a tool. And especially since there is more things happening now around Iran, and we have the Suez Canal and all of these things. Gold fell by $43 to $1,978. I still stay bullish to gold, and I want to be there in case any of the worst things happen. I think that will be a safe place to be. For the week ahead, expect a volatile week. I am really not sure will it be a green or a red week. I have that strong feeling that we are heading for a possible deep fall. And that fall will come very strongly and very fast. We pushed up from that strong support between 11,000 12,000 on Nasdaq. But as we push up, we will have higher momentum. So if a fall comes, it will come with much higher momentum, being able to break much faster down. That's the difference between being very close to support levels and high above support levels. Technical analysis, you can use this on your stock trading when you watch the stock. If you use stockinvest.us, you look at the charts, you will see some gray bars on the right hand side being the volume. Now use this as support resistance. If there is plenty of them below, that means that there is strong support. Now if there is a space between these, that means there is little support before you see the gray bar. Same thing on the upside with the resistance. If there is very little resistance above, you can expect fast movements. That was why I said that there was such an upside in Nasdaq. Still is huge upside, so we can easily go for a 13,000 on Nasdaq. I wouldn't be surprised at all if we end the week at 13,000. At the same time, I will not be surprised if we knock below 12,000 during the week. How will I play it? Because we're ending the podcast with the trading tips. How will I play it? Well, I will not gamble. I will not invest more. Actually, I will try to reduce my investments a little bit because I rather be a little wrong and reduce my losses than being caught by an extreme surprise. So personally, I am not going to increase my exposure. We are still not there where I will do that. I will hold on a little bit, see if some of these things, which I think can affect the market quite harshly, will calm down. I want to see how the Russians react to the F-16, all these things, how the Ukraine war is moving, because now Russia have some momentum. They took Bakhmut. We are waiting for the spring offensive by the Ukrainians. We know the F-16s are coming, and Putin promised that send F-16s and there will be consequences. So he cannot just keep talking, because that makes talk worthless in the end. So how will he respond? How will he do it? I don't know. Maybe you know, but I don't know, and I don't want to be caught by a surprise. So my plan is, if one of the stocks are being sold, I will not invest into any new, and they will be sold by stop loss, some of them. So what am I into right now? I'm into Zomedica, Northrop, Chevron, and last week I bought Pintrest. I was able to get Pintrest at 21.45, currently at 22.70. I think there is much more upside in Pintrest, giving markets going good. We have to understand that Pintrest was oversold, quite much volatility, meaning that if we get into a red day, Pintrest can have a very red day, because it's not back into a good streak. So I expect huge volatility in Pintrest. I'm pretty sure that the total trade will end with a good green. It can be a very good green, or it can be a marginal green, but I expect strong movements in Pintrest. So I stay in 4 stocks. These are the 4 stocks that I will stay in. If to trade stocks, because I will trade, of course, a few stocks outside this portfolio, and I'm doing that as well. But personally, if I was you and I have to trade, because maybe you are addicted to trading, you cannot stay away from the markets when you should stay away from the markets, you have to do your daily trades. I would look for quarter results companies, check how they are doing before, after, during the quarter results at Stock Invest, we try to make that easy for you. You can watch how they move before. Usually, it's no guarantee, but it will give you an idea. Some stocks move quite fast before, quite fast after, and this is something you can trade. So either the big quarter results, Best Buy for instance, I expect huge movements in Best Buy. Dollar Tree, Costco, not so much in Costco, but Marvel should also move. So that's trading tips. The other thing, which I repeated now for quite many weeks, personally, I would go for those who are oversold on the relative strength index, has support below, not too much resistance above, because I think these will be some of the most secure buyings. That was how we found Pintrest. That was one of the reasons for Nvidia, was in the same situation, but much shorter term than Pintrest, and etc. Northrop, Chevron I keep because I think these stocks can hold somewhat good if the markets fail. They will not do particularly good if let's say that the market will do good this week, up 3%. I don't expect these two stocks to do good at all. I expect them to move. I expect Chevron to move. If we see more war-related mongering, then I think we will have a tick in the oil price, and Chevron should move up. Northrop, I think, will just come as quarter results, etc. will come in. That made for an extremely messy podcast, much thinking, much high thoughts. But as I say, the long lines are very important, and right now I think we again are in a situation where it's a bit risky. In a situation like this, I just stay low. And anyone follow knows that when I think it's a good time, I go in hard. And that's been very successful. Let's end the podcast with a few personal notes. As I promised you, I would give you a little insight into my life and the things I've done. Last week I did some metal detecting as well. Actually, I was out yesterday as well. No strong finds this week. So if I find anything really nice, I will show you, as I usually do, tell you what I find. My friend, he found quite much gold. Lucky one, but he is also one of the absolutely best detectors in Lithuania. And I wouldn't be surprised if he rank quite high up. He was doing some lakes, finding quite many grams of gold. And he started last year with gold, ended last year with gold. He really got it going. I'm not at that level, but I have some silver. Hopefully I will move up a division during this year. On top of this, of course, I do business building. I'm one of the co-founders behind Stock Invest. It's actually built on things I built many years ago. It's just being refined as we speak. And happy to say that we are moving along with live signals. And this week, I think we will release, so you can check out yourself what AI think about stock. We are using ChatGPT 4. Analyzing stocks, so I believe hopefully during this week you should be able to access also these kind of analysis at stockinvest.us. On top of this, I do a lot of other things, involved in a few other things, but stock related. My current endeavors is working with auto trading, so that's one of the things that I'm focusing on right now, is finishing all these things with auto trade. Now, if you want to auto trade, you can do this. There are quite many solutions out there where you can easily auto trade. You set up the algos yourself, you pick the indicators, etc., and they will auto trade for you. I decided a long time ago that I want full control of absolutely all of the aspects of auto trading, so I built all systems myself for auto trading, and hopefully that project will be live very soon, where actual auto trading on my knowledge of the stock market will be a reality. All signals are based on my knowledge, on my algos, and I really hope so far the results are very good. They are testing on paper money, and as soon as I squeezed out all the bugs, and all the things that I think might be about or could be a problem, I will go for live money. Now, you don't want your auto trader to go totally crazy with live money. That's not what you want to do. You want to have some sort of control. So I'm just currently building the control mechanisms around it. Then I will refine the algorithms even more. I will share that journey with you who are listening to this podcast. I will share that journey, and during the fall I expect to show it. If you're watching the YouTube version or the Spotify video version, I expect to show some of the results as well, so you can see that project and how it moves. Much talk, hopefully you managed to gain something out of it. I hope you will have a good week, that you will be able to put some greens into your portfolio. I would be very happy if you come back next week when the next podcast will be out. Until then, just have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.